So how much do the trade negotiations from here have the potential to actually increase currency volatility, which has been fairly subdued?
I think substantially so. I mean, we are heading into that period with thinner market liquidity over the summer. July, and particularly August, has got a history of seeing higher market volatility. It's also a period when China has a history actually of making moves on currency policy all the way from 2005 onwards. And given the trade tensions that they're building, as we've just heard, given the fact that currency policy as an issue has come up as these trade tensions have increased, both from the side of the US and from China, I think there's plenty of reason to expect that actually volatility will increase, not just in the local market, but of course in related markets as well, from Hong Kong to Korea and then on outwards.
Yeah, and on that point, just to build on it a little bit, Simon, I mean, if you look at dollar CNH 3-week implied volatility, we have seen those yuan protection costs surging already. And of course, we've had that stronger fixing yesterday, which strengthened the yuan a little bit. What do you expect the policy on the yuan to be from here? We heard from Yi Gang last week, and I know you're familiar with the interview, saying no one number is more important than any other. Are you seeing the yuan slide towards 7?
Ultimately, yes. Look, I don't think anything's going to happen before that G20 meeting, because why would you rock the boat right now? And I think in one of the reasons why we've seen a little bit of the talk of support for the CNH in terms of what the issuance of bills is to try and provide it some kind of support. But beyond the G20 meeting, if nothing happens, and let's be fair, given everything we're hearing right now, it doesn't sound as though something is going to happen, then clearly there is going to be a ratcheting up of tensions. Obviously, that's going to be in part a little bit about the stuff about rare earth. It's going to be about tariffs as well. But when we heard from the PBOC governor last week, that wasn't by accident. You don't suddenly start hearing him talking about it not being a numerical number, the greed for greater flexibility, the need perhaps for the renminbi to weaken slightly. Those are not accidental comments, particularly when we also had a little bit of indication just before the end of May that that was one of the big issues in the trade talks, that China wanted greater flexibility.
Yeah.
So yes, I think there's going to be far more of a focus on that post G20 if it doesn't go well. By the looks of it, it won't.
So how would you advise clients to trade this then, Simon? Is it through the implied volatility? Is it through the yuan spot? Is it through proxy currencies elsewhere in Asia? Is it through the yen?
Well, typically, I think that you probably always are going to start to focus on proxy currencies. Look, I think one of the things you always recognise with Beijing and the PBOC is they aren't terribly comfortable with speculative position taking against the currency. So there will always be an attempt to squeeze out speculators, possibly by bear traps, and certainly they will lean into it to a degree if they believe it's causing excess volatility. So it seems to me that possibly a better way of approaching that is via proxy currencies. The Australian dollar is an obvious one, but I think the South Korean won as well, particularly given the fact that it looks as though we're talking about a rate cut coming in the not too distant future.
Yeah.
I think that's where that's going to start to play itself out.